who want an exposure to a market or an
Everything they need in one place.
Be the world's foremost authority on
Individuals, advisors and institutions.
Hello and welcome to Morningstar. I'm Emma Wall and I'm joined today by Mark Burgess, CIO of Columbia Threadneedle. Hello, Mark.
Good morning.
So I know that you're a great advocate of active management. What can active management offer investors that passive simply can't?
We only manage money actively, and I think at the starting point we have to sort of think about what a stock market is, which is where those that require capital meet those that have capital. And if those that have capital provide it are indifferent to the returns that they earn from that capital, then that starts to break down the economics that we understand. So we think active management is critically important for a functioning economy.
And good for the economy and good for investors.
Absolutely. So we generally focus on companies that are well managed, are good businesses, earn above average returns on capital employed, and will generally win out in the industries that they work for. So we generally put together a portfolio of shares that will, over time, outperform their benchmarks.
And it's quite interesting times at the moment because I think people who've invested in passive funds kind of been lulled into a false sense of security since the crisis, because stock markets have seemingly only gone one way in developed markets, and that's been up. However, that's not a normal market. A market cycle goes down, it goes sideways.
Yeah.
And that's really where active management can come into its own.
I think that's right. So clearly those that have invested in passive strategies have enjoyed the market run that we've seen, but as have active strategies as well. Certainly we've generally had a good performance time over the last 4 or 5 years. But as returns start to become more difficult to find, particularly with rising interest rates and the cycle starts to turn, then I think absolutely it's important to focus on companies that can win in that environment. And it will be about alpha generation rather than just enjoying the beta.
And I think people level sometimes the claim about active management that obviously it's more expensive than passive management. What would you say to that?
I think you're mistaking the point if you only focus on the cost. It's about what return you enjoy, and clearly we charge higher fees than passive funds do, but we generate higher returns than passive funds do. And the net return has generally been higher than the passive return. Indeed, over 10 years, 100% of our UK, European, Asian and US and global funds have outperformed their benchmark, which is quite a statistic, and have generated higher after returns fees than passive funds have. So it's not just about the cost, it's about what you get delivered for that cost.
Mark, thank you very much.
Thank you.
This is Emma Wall from Morningstar. Thank you for watching.